Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the year-to-date ROI, or return on investment. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So I wanted to touch base on the year-to-date ROI and see, what years is it tracking the closest? Because of course, every single year is going to be slightly different. You can see that, a lot of these years, they all take different paths, but there are similarities, right? For instance, you can always look at bear market years, 2014, 2018, and 2022, and see that they look roughly similar to each other. In fact, if you average out 2014 and 2018, it basically told you it was basically where the 2022 year ended, the average of 2014 and 2018 in terms of the drawdown from the all-time high. So for that reason, it can be useful to talk about this stuff and just get an idea. And we've looked at pre-halving years a lot. We looked at 2015, 2019, and of course 2023. And one of the interesting things about 2023 was that it ended up looking a little bit more like halving year returns, right? If you look at election years, so halving years, and you average them out, you can see that 2023 actually ended up giving what we would typically see in a halving year as opposed to what we had seen in pre-halving years. Now, one of the reasons for that could be, of course, due to the spot ETF, although I don't even know that that's necessarily true. We also saw traditional markets rally a lot in Q4 as well, and Bitcoin, being a risk asset essentially, or at least it operates like one typically, then it makes sense that it generally followed the NASDAQ. So perhaps just saying the spot ETF isn't actually the real reason. It could just be that there was a broader market rally. That's not to take things away from the spot ETF. I'm sure it has some form of an impact. But there you have it, right? You can see that 2023 actually followed halving year returns a little bit closer. And so then sort of raises the question, well, what's 2024 doing? And we could go through and look at various outcomes. 2023, you can see that 2024 is currently underperforming 2023. One of the things that we talked about a lot was to expect some form of a summer lull where, the market gets relatively boring. Now, of course, when we said that back in April, we first said, look, there's probably going to be a bounce in May, right? Because a lot of times that's what happens. You hear people say sell in May and go away because the second half of April is down, and then we end up getting a rally in April, and then it comes back down later on, and then you get your summer lull, right, as the market starts to accept it. That doesn't mean, the price can't ever go up, right? Prices are stochastic, markets are stochastic, and of course they're going to bounce around. It's just kind of like what happened last year. You can see that the market didn't really go anywhere. Yes, there were periods when it went up a lot and periods where it dropped 20%, but the market was relatively flat until the fourth quarter of the year. And so at this point, maybe making the comparison to 2023 is valid. After all, only a few weeks ago, we were actually at the same ROI in terms of year to date. But you can see right now we're actually a little bit below where we were at this point in 2023. For instance, in 2023 at this time, Bitcoin was about 80% above the yearly open. Right now, it's only about 36% above the yearly open. Of course, it doesn't really look anything like 2022. 2022 was basically just down only. Then you could pull up 2021 and see if there's any similarities there. Now, earlier in the year, there were some similarities, but it almost looked like sort of a muted version of 2021. And now maybe we're getting a muted version of what happened in the summer of 2021. It's a potential outcome. If 2023 gives halving year returns, maybe 2024 gives post halving year returns like 2021. But that still remains to be seen. We can furthermore go take a look at 2020 and see that we're actually only slightly above that. In that case, we basically stayed flat. It's currently day 180. In that case, we stayed flat for about another 20 days or so before moving slightly off that level. So this one might be another one to keep a look, to keep an eye on in terms of comparison. But there was a pretty big divergence here early in the year, where in 2020 we had a big move down. in March, and in 2024, it was actually a big move up in March, almost the exact opposite, right? In 2020, we put in a major low. In 2024, at least in March, at least so far, we've put in the yearly high. So quite a big difference there. Now we could also look at 2019. And this is one of the things that I keep going back to, and I know a lot of people have an issue with me comparing it to 2019, and I get that. And I'm not entirely convinced myself, right, that it's just 2019. As I've said before, it's probably some combination. Some people look at it and say, well, it's 2016. Other people say, it's 2020. I've been sort of in the camp of like, well, why not compare it to 2019, where we also had similar macro, sort of similar monetary policy at the time in terms of, after a long rate hiking cycle and just before the rate cuts. And so I don't know. I mean, you can see that we're well below 2019, but I suppose what if you shifted this kind of up here where you're just sort of seeing these slightly lower highs and a very slow grind. If Bitcoin gets a larger drop, kind of like back down to this level over here, you see how 2019 came back down to this level? If we get back down to that level, then I think it's basically, all right, guys, it is really similar to 2019. If that doesn't happen, then I think it would be safe to drop that comparison, if that makes sense. A lot of people compare it to 2016, which again, potentially does have merit as well, especially when you look at ROI after the halving, which we did a video on yesterday. After the halving, we're actually very closely matching what was going on in 2016. 2018 obviously is not a great comparison. 2017, we're underperforming 2017. 2016, again, maybe 2016 is valid as well, but even in 2016, you can see that there was a larger drop-off that occurred about a month from now. 2015, that was a pre-halving year, and then, of course, 2014, a bear market year. Here's 2013, we're well below that. 2012, actually slightly above 2012, and then 2011. So the only other thing I wanted to touch base on was there's also the average of the last two post-halving years, right? We did the average of the bear market years for 2020 or 2022. So if you average out the last two post-halving years, you kind of get an interesting comparison. And you can see that it actually has been tracking it relatively closely, but it's been a somewhat muted version of it, right? Like it hasn't gone up as much. It's mostly stayed below it. And in that case, if it were to continue to follow this, it means the market kind of still staying relatively boring for at least another, couple of weeks or so. So that might be another fair comparison. Again, the only reason I'm looking at that is because we know that 2023 gave us more halving-like returns, so maybe, or halving year returns, so maybe 2024 gives us more post-halving year returns. But with that said, I mean, we also would expect diminishing returns, as we've seen from one cycle to another. And so right now you can see that 2024 is underperforming 2017, but it's slightly outperforming 2021. So certainly an interesting comparison to make there. At this point, as I've said before, I don't really think it's valid to look back at any prior year and say that, well, this is how it's going to play out. Because of course, every single year is going to be slightly different, right? Even the prior halving years, like 2016 and 2020, while they did ultimately trend higher for the entirety of the year, the path that they took to get there was very different. If you were to look at 2017 and 2021, while they trended higher, the path they took was very different. And so I don't want to give anyone the idea that it has to play out like any prior year, but it just goes to show you that the markets can be somewhat predictable in the sense that you have your bear market years, right? And of course, the main thing for there is figuring out, all right, well, is it more like halving year returns? Is it more like post-halving year returns? Or is it more like pre-halving year returns? Because, the pre-halving year of 2023 did not really give us pre-halving year returns. It more so gave us halving year returns. And there's this whole idea of like, well, is it going to be a left translated cycle or not? Historically, we've seen Bitcoin put in the all-time high in Q4 of the post-halving year. So that would be the fourth quarter of 2025. It remains to be seen if that's going to happen. Of course, there's a lot of people in the left translated cycle camp calling for a peak in Q4 of this year. I would say that if you are in the left translated cycle camp, you should also consider the March top as a potential top for a left translated cycle. If it ends up being, say, Q4 of 2024 as a left translated top, then you would expect Bitcoin to pick up in the fourth quarter of the year. If it's going to be more like a normal cycle where just the rate cuts are shifted within the cycle compared to the last cycle, then you would expect Q4 to actually go down for Bitcoin and then for the market to pick back up in 2025 and then peak when it normally does in late 2025. But again, there's a lot of different comparisons to make. I just wanted to give an update on where we are in the cycle, and just kind of show, where 2024 is in terms of year-to-date returns, currently up about 36%. And we will continue to keep an eye on this. Thank you guys for tuning in. Make sure you subscribe. And again, you guys can get access to these charts, not only for Bitcoin, but also for many different cryptocurrencies, as well as stocks and commodities and indices and in the Forex market. So make sure you guys check that out. IntoTheCryptoverse.com. I'll see you guys next time. Bye.